Imagine for a moment that we are standing in the desert of Giza, staring up at the Great Pyramid. It has stood there for 4,500 years. Earthquakes, storms, wars, and entire civilizations have risen and fallen around it, yet the pyramid remains. Why? Because the ancient architects understood a fundamental law of physics that modern investors have completely forgotten. You cannot build a peak if you do not have a base. Today, most people try to build their wealth like an upside-down pyramid. They are buying crypto, they are trading options, they are looking for that one moonshot stock that will make them rich overnight, all while they have credit card debt, no emergency fund, and zero stability. They are trying to build a penthouse on a foundation made of sand. And inevitably, when the financial earthquake comes, and it always comes, their entire structure collapses into dust. If you feel like you are working hard, but your net worth is stuck in neutral, it is not because you aren't smart, and it is not because you aren't making enough money. It is because you are putting your money in the wrong order. You are buying the roof before you have poured the concrete. There is a specific mathematical code to building wealth that is virtually guaranteed to work, but you have to follow the sequence without skipping steps. This is what I call the hierarchy of wealth. It is the difference between a gambler and an architect. A gambler relies on luck. An architect relies on structure. Today, I am going to hand you the blueprints to build a financial fortress that will last for generations. The first step in the hierarchy is what we call the shield. Before you even think about investing a single dollar in the stock market, you need to stop the bleeding. If you are driving a car with a hole in the gas tank, it doesn't matter how fast you drive, you will eventually run out of fuel. In your financial life, the hole is instability. Step 1 is to save a mini emergency fund of $1,000 to $2,000. This is not your full safety net. This is your Sanity Fund. It exists so that when, not if, but when your car breaks down or your laptop dies, you don't have to use a credit card. You are breaking the cycle of borrowing. You are drawing a line in the sand and saying, from this day forward, I do not finance my survival. This money sits in a boring savings account. It does not earn interest. Its job is not to make you money. Its job is to help you sleep at night so you can make rational decisions. Once the shield is up, we move to step 2, the free gold. If you have a job that offers a 401k match or an employer pension contribution and you are not taking it, you are literally working for less money than your colleague sitting next to you. This is the only place in the financial world where you will find a guaranteed 100% return on your investment immediately. If your employer matches up to 3% of your salary, you contribute that 3%. If you don't, you are walking past a pile of gold coins on the floor every single day and refusing to pick them up. This is not investing. This is intelligence. Secure the match, but do not contribute a penny more than the match yet, because we have a much bigger enemy to kill first. This brings us to step 3, killing the parasite. I am talking about high-interest debt, credit cards, personal loans, anything with an interest rate above 6 or 7%. This debt is a parasite attached to your neck, draining your life force. Mathematically, there is no investment in the world that can consistently beat the 20% or 25% interest rate of a credit card. If you're investing in the stock market hoping for a 10% return while paying 20% to the bank, you are playing a losing game. You are feeding the enemy. You need to attack this debt with the ferocity of a gladiator. Use the avalanche method, paying off the highest interest rate first, or the snowball method, paying off the smallest balance first for a psychological win. It doesn't matter which weapon you use, as long as you kill the beast. Every dollar of debt you pay off is a guaranteed, risk-free return equal to the interest rate. Now that the parasite is dead, you can finally build step 4, the Moat. This is your fully funded emergency fund. 3 to 6 months of living expenses, not your salary, but your expenses. This is the money that separates the wealthy from the worried. When you have 6 months of cash sitting in a high-yield savings account, you walk differently. You speak differently. If your boss threatens to fire you, you don't panic because you have a moat protecting your castle. This liquidity gives you the power to say no. It prevents you from ever having to sell your investments at a loss just because you need cash. It is the foundation upon which your empire will rest. Only now, with the foundation poured, the parasites dead, and the moat filled, do we start building the tower. Step 5 is the engine. This is where you invest for growth. We are talking about tax-advantaged accounts like a Roth IRA or an HSA. The government is the biggest partner in your business. They take a cut of everything. A Roth IRA allows you to legally cut them out of the deal for your future growth. You put money in, it grows tax-free, and you pull it out tax-free. Maximize these accounts. Buy low-cost, broad-market index funds that track the S&P 500 or the total world market. You don't need to be a stock-picking genius. You just need to bet on human innovation and compound interest over time. History shows us that the market always recovers and the patient investor always wins. Finally, once the tax buckets are full, you move to the pinnacle of the pyramid, the expansion. This is your taxable brokerage account, real estate, or starting your own business. This is where you pour the excess fuel. At this stage, your money is working harder than you are. You are no longer trading time for money. You are trading capital for freedom. This is where generational wealth is created. Most people look at this list and say, "That sounds boring. I want to buy the next Bitcoin." And that is exactly why most people are broke. Excitement in investing is usually a sign of danger. Real wealth building is boring, repetitive, and incredibly effective. It is about laying one brick at a time in the exact right order until you have built something that the wind cannot blow over. You have to decide if you want to be entertained by your money or if you want to be enriched by it. I want you to look at where you are on this hierarchy right now. Are you trying to invest in step 5 while you are bleeding out in step 3? Are you ignoring step 2? Be honest with yourself. You cannot cheat the laws of financial physics. If you skip the foundation, the structure will fall. But if you respect the order, if you discipline your ego to follow the plan, you will look back in 10 years and see a fortress where there used to be a shack. If you are ready to stop gambling and start building, I want you to make a pledge today. Go to the comments and type the word architect. Just that one word. It tells me that you are done with the chaos, done with the shiny objects, and ready to follow the blueprint. Type architect below. And if this video gave you clarity, hit the like button so the algorithm knows that we value wisdom over hype. Make sure you are subscribed to Limitless Wealth because in the next video, I am going to expose the 7 poor habits that keep you broke even after you start making money. Habits that are invisible until it's too late. You need to know what they are. I'll see you there.